Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour. Inflation accelerates after 3 months. Rising food prices push consumer price index to 7% in August. Inflation has remained above RBI's tolerance limit of 6% for 8 months in a row.
I think the good sign that we have today is that the economy has really normalized. The recovery has been robust.
ITC Chairman Sanjeev Puri is upbeat on the economy and demand, even as he says inflation remains a key risk going forward. Puri sees green shoots in rural demand, says hotel industry is seeking demand like never before, also adds budget tightening helped protect margins and promises more steps to keep costs in check. That's an exclusive. The stock markets chalk up robust gains as global markets look beyond short-term pain. Nifty moves closer to 18,000 and Sensex holds above 60,000. The rupee shakes off early weakness to end marginally stronger. Government likely to use funds mobilized from windfall gains tax to help state-run oil marketing companies stay in shape. Sources say a mechanism to funnel funds is in the works. OMCs have lost more than 18,500 crore rupees in the first quarter. The government's LPG Subsidy Bill could rise. Sources say government may shell out an additional 25,000 crore rupees or more to help cushion the impact of higher international crude prices on oil marketing companies. Air India embarks on a fleet expansion drive, is set to lease 30 aircraft over the next 15 months to bolster domestic and international operations. Ukraine reclaims key cities in the northeast from Russia after a dramatic counteroffensive. Do you still think you can scare us? Asks Ukraine's President Zelensky. Russia targets power plants and infrastructure facilities in retaliation. More than 1 million ton of rice export shipments are stuck at various ports across India after government imposed restrictions. Exporters ask authorities for a carve-out for shipments that were already in transit at the time of the ban. Large corporations want access to data from the Unified Payments Interface, says the Deputy Governor of RBI, Ravi Shankar, calls for laws and regulations to ensure monetization along with protection of customer data. Electric vehicle startup Yulu raises more than 650 crore rupees in a funding round led by America's Magna International. Existing investors like Bajaj Auto also participate. Shares of PBR and Inox rally in trade after a sharp fall on Friday. Brahmastra mops up more than 210 crore rupees worldwide in the first weekend. Stock markets gained for the third straight session with major indices ending at their highest level in almost a month. Sensex gained over 300 points to reclaim the 60,000 mark. Nifty gained over 100 points with banks and mid-caps also perking up. India's consumer price inflation has risen to 7% in August, led by higher food prices. CPI continues to remain above the RBI's upper limit of 6% for the 8th consecutive month. Meanwhile, India's factory output witnessed a 2.4% growth in July. Lata Venkatesh is here with all the analysis.
That's right. Inflation is a slightly bothersome number because it's come in not just higher than street expectations, but that ugly 7 handle which we thought we would put behind us, 7 has come back. The worst part of the number, which one always feared, is coming in from food inflation. Cereals inflation has come in at 9.57%. It's almost a 2% month-on-month gain in cereals. The government probably smelt it, and that's why you had that import ban on broken rice. This is going to be a spot of bother because of the spatial distribution of monsoon and the fact that there is a desire to hoard food grains and perhaps therefore higher exports of rice as well, now that wheat exports were banned. So we have to watch the space, the food space and the cereal space in particular. Food inflation as well coming in almost a percentage point higher than the month of July, coming in at well over 7%, 7.6% is a spot of bother. This may not change the Reserve Bank's approach to monetary policy which is up on September 30th. because the Reserve Bank had forecast a July, August, September inflation of 7.1%. And with 6.7 in July and 7 in August, the average still seems to be running a little south of the Reserve Bank's forecast. The experts we spoke to are all expecting a 25 to 35 basis point hike on September 30th. That's almost a given. That's what the market is watching for. By the way, speaking of markets, the bond markets may not react to this at all. They are only watching out to what the JPM index committee decides. So that market will move to more index inclusion and perhaps the crude prices. This coming in about 10 basis points or 15 basis points higher than the market expectation will not be a bother for the bond markets. A word on IIP at 2.4. It's a bit of a disappointment because our poll was at 4.8 and just about everyone on the street was around 4 or higher than 4. But IIP is not a much watched number. There are problems with the composition of the basket itself. And within IIP, consumer durables may be a spot of bother. Non-durables. That's come in at about -2%, which indicates that the lowest level FMCG goods are not getting consumed enough, which indicates some pain at the bottom of the pyramid. But otherwise, not much of a bother. Overall picture doesn't change much, except that inflation is a little higher than expected, growth a little less than expected. That's not a very pleasant combination.
All right. Thank you very much, Lata Venkatesh. Let's move on. The big newsmaker of the day, ITC Chairman and Managing Director Sanjeev Puri, says the economy has normalized and demand recovery is robust. Speaking exclusively to CNBC-TV18's Shireen Ban, Puri also warned that inflation remains a key risk, even as he said there are green shoots across rural India. He's also upbeat on the hotel industry, which he believes is seeing demand like never before. Puri credited tightening of the belt for protecting the margins and promised more such steps to keep costs in check.
I think the good sign that we have today is that the economy has really normalized. The recovery has been robust and the economy is progressive, and that stable environment does well for businesses. So we are continuing to experience strong growth across our business segments. Yes, inflation is a concern, but that's more limited to the consumer side, where we are continuing to see growth.
Let's talk about consumer sentiment in a little more detail, Sanjeev. As you pointed out, inflation is biting. What we hear in terms of commentary from other CEOs, leading FMCG companies, is that the urban pockets continue to be stronger in comparison to the rural pockets. There has been a fair degree of downtrading in the market as well. What is the visible indications that you're getting both on urban versus rural demand? Are you starting to see a pickup in rural? And what does that mean in terms of your ability to be able to pass on any future price hikes at this point in time? You said that will be the last resort. Is that something that you're considering today?
So it's like this, that both the trends are visible in the market. There is a strong trend of premiumization. We are also seeing people titrate and go down to lower price packs or really down trade. So both of the trends are visible. We are experiencing overall a strong growth, and what we are also seeing is some green shoots of pickup even in rural. I do believe that given that the inflation is kind of now cooling off.
I just wanted to get a clarification from you on what's happened on the export front because of the restrictions. What was the revenue contribution on the export side and what is it today? And secondly, you also spoke about commissioning new plants. What is the capex likely to be? These are, of course, already plants that are going to be commissioned. But in terms of being added on, what is the capex outlook?
Okay. So as far as the revenue is concerned, I think the large surge in our revenues that you saw in the recent past has been driven by some of these opportunities. No doubt about it, right? But these are really trading opportunities, right? And trading opportunities also are not, these are small margin opportunities, right? What I'm really trying to say is, as far as exports are concerned, this kind of opportunistic exports are concerned, they come with very wafer thin margin. Okay. It's not something that is going to materially, change the, They will be blip in the top line,
Okay.
but it does not give you commensurate bottom line.
Okay.
So just we have to keep that in perspective,
Okay.
right? Hopefully the right sense will prevail over a time.
And you can catch the entire conversation with Sanjeev Puri at 9:30 p.m. right here on CNBC-TV18. And state-run oil marketing companies could be in for some relief. Sources say the government is likely to use funds mobilized through windfall gains to help OMCs stay in shape. As things stand, oil marketing companies are taking losses for every litre of diesel being sold. They are not losing any more due to petrol. Timsi Jaipuria gets you all the details.
Well, that's right. What sources are indicating to us is clearly that the government is likely to use funds mobilized from windfall gains tax levy to help public sector OMCs to stay in shape. Sources are indicating that government feels PSU OMCs, they need help right now. They've already incurred a huge loss, a net loss of 18,500 crore rupees alone in first quarter, and second quarter too seems to be a little difficult for them. Thus, they need government support. And government feels that rising inflation, volatile fuel prices may pose additional burden on OMCs. Thus, it is very important for them to stay in shape. Government is currently contemplating a mechanism to funnel in funds to OMCs, and soon stakeholders will hold discussions to see how best these funds can be utilized, and most importantly, what could be a mechanism to funnel in these funds. The final contours of financial aid mechanism for OMCs is discussed. That will be something that Finance Ministry officials along with Petroleum Ministry and these OMCs will sit together and see what could be a best possible mechanism. But yes, as of now, sources clearly saying that the levies that the government has earned from windfall gains tax was meant for exigencies and not to meet fiscal requirements, and exigencies like to keep OMCs in shape is something that they need to address immediately. Back to you.
All right. Thank you very much, Timsi, for joining us. And speaking of pressure on oil marketing companies, the government subsidy bill on LPG is also set to shoot higher. Sources say government could spend an additional amount of more than 25,000 crore rupees this year to compensate the losses suffered by OMCs. Sapna Das is here with more.
Certainly, there's a possibility that the government will be giving something additional on the LPG front to the oil marketing companies, and I think the reasons are pretty much clear. If you look at Saudi CP, that is a benchmark for pricing of LPG in India, that has gone up by over 300% in the last 2 years. But here in India, the price revision has been, minuscule, or rather just 1/10 of that international benchmark. Prices have gone up by hardly around 28% in terms of the LPG cylinder. Clearly, the price revision have been very, very calibrated, some 50 rupees odd, in a few weeks. That's about it. So keeping all of this in mind, there are certain under recoveries that the oil marketing companies probably would have incurred, maybe even some losses that they could have incurred on the LPG subsidy front, and the government will be coming forward to make good that. That's one. Second, we are given to understand that probably the demand could be as high as around 25,000 crores to 30,000 crores in terms of additional LPG subsidy. We really don't know where this number will settle. I'm sure that it will be lower than that, but it's important to note that some kind of comfort is going to come in for OMCs on the LPG front very soon.
Right. Thanks, Apna, for joining us. Big development from the divestment corner now. Sources tell CNBC-TV18 that the government is likely to invite expressions of interest for the strategic sale of Container Corporation of India. By December, sources say the government could retain some residual stake in IDBI Bank after the stake sale. The government has appointed ICICI Securities, Axis Capital, HDFC Bank, Citigroup and IIFL Securities as merchant bankers to work on its stake sale in Hindustan Zinc. Government is looking to divest some stake in the fiscal from the 29.5% it holds in the company. Over 1 million tons of rice shipments are stuck across Indian ports after the government banned exports of broken rice and imposed 20% duty on export of non-basmati rice. Exporters are seeking relief from the government, asking it to allow shipments that were ready for exports before the decision was announced. Exporters feel sudden and overnight changes impact business contracts signed in advance based on discounts as per duties prior to the notification. We're going to take a short break here on India Business Hour, but coming up, Ukraine reclaims key cities in the northeast from Russia after dramatic counteroffensive. Details when we return. The big global story: Russian missiles pounded power plants and infrastructure facilities in Ukraine's Kharkiv in retaliation, a day after a counter-offensive by Ukrainian forces helped it reclaim key cities in the region. This marks a significant turning point in the 200 days of the Russia-Ukraine war. Ukrainian army claims that it has captured over 20 towns and villages in the region. However, Russia still has most of eastern Ukraine under its control. The Kremlin has responded to Ukraine's counteroffensive, said that Russia will achieve the goals of its special military operation. Kremlin spokesperson also said that no discussions on demilitarizing Europe's largest nuclear power plant took place. That was a key recommendation from the International Atomic Energy Agency. The Ukrainian Defense Ministry said that Russia has ordered the withdrawal of its troops from all parts of Kharkiv, which lie to the west of the Oskil River. Here's that story.
In a lightning-fast advancement, Ukraine is quickly seizing ground. The counteroffensive gaining momentum and showing no signs of slowing.
So we have to win, and this counteroffensive shows that we can win.
On the 200th day of war, Ukraine announced its troops reclaimed more than 1,100 square miles from the Russians, liberating more settlements in the east, crippling Russia's grip in the Kharkiv region and forcing the Russians to retreat. Burned out tanks and fresh artillery left behind.
Would you describe what we're seeing with Ukraine as a turning point in this war?
Absolutely a turning point and the sign of the demise of Russia in Ukraine.
And there's a deepening crisis at Europe's largest nuclear plant. The sixth and last working reactor shut down by Ukrainian energy officials after crews at the plant managed to restore an external line, the plant's only source of power.
Are you concerned about a nuclear disaster?
Yes. All of this is too close for comfort for any of the nuclear security people working in the field. It is literally playing with fire.
A precarious situation made even worse because the shelling seen for weeks keeps coming. Experts say if the power line is struck again by artillery, the plant will be forced to run on backup generators that run on diesel. But there's only a 10-day supply of fuel.
Air India is preparing to spread its wings further. The airline has signed leases and letters of intent for 25 Airbus narrow-body and 5 Boeing wide-body aircraft. These new aircraft, which will enter service from late 2022, will increase the airline's fleet by over 25%. Tata Consumer Products has announced its foray into plant-based health supplements with the launch of a plant-based protein powder under the new brand Tata GoFit. The company says that Tata GoFit has been specially developed for women and has an innovative and differentiated formulation with digestion-friendly enzymes and gut-friendly probiotics. Meanwhile, Vedanta has decided to build its first ever semiconductor plant in Gujarat. The company has a $20 billion deal with Taiwan company Foxconn to manufacture chips in India. Reports say Vedanta has obtained financial and non-financial subsidies, including on capital expenditure and cheap electricity from Gujarat to build the semiconductor plants. Shares of PVR and Inox rallied in trade after suffering sharp fall on Friday on the back of tepid reviews for Ranbir Kapoor, Alia Bhatt star Brahmastra. However, the movie has so far had a stupendous run at the box office, raking in more than 210 crores worldwide over the weekend. Deputy Governor at the Reserve Bank of India, Ravi Shankar, says large corporations want access to UPI data. Speaking at an event in Delhi, he called for new laws and regulations to ensure monetization along with protection of customer data.
Many large corporates discussed with me is how can they access UPI data? How can they access UPI data? Because that will give information which can be used to structure products that can be specifically targeted at specific cohorts of the population. But at the same time, we will have to have regulations in place primarily have laws in place, followed by regulations in place, which ensures that customer data is not only safe, that customers' privacy is not only protected, but the monetization of customer data is done in a responsible manner. It is done in a manner where the customer is aware, where the customer has some level of consent, some level of comfort with the use of that customer's data.
Let's take a look now at the key developments from the startup space. Shruti Mishra joins us with a wrap.
Well, thanks for that. Here are the key headlines in the startup space. Yulu raises $82 million in its Series B funding round led by Magna International. The mobility startup is forming a new entity, Yulu Energy, with Magna to create a nationwide battery charging and swapping infrastructure to cater to the demand from Yulu and other EVs. In the acquisition space, Mensa Brands acquires peanut butter maker MyFitness for an undisclosed sum. Now, through this partnership, the e-commerce unicorn will bolster the brand's footprint, launch new categories, invest in brand building, and expand into global markets. WazirX announces that the ED has unfrozen its bank accounts, allowing the platform to resume banking operations after almost a month. The accounts were frozen in August in connection with the ED's probe into illegal loan apps. WazirX said it has no association with the accused fintech companies and instant loan app entities which misused its platform for illegal activities. In the IPO space, Sachin Bansal-led Navi Technologies gets SEBI nod for its initial public offer as per Money Control. Navi Technologies had filed draft papers in March this year with SEBI to raise up to 3,350 crore rupees through a fresh issue of shares. And in global news, Twitter said payments made to a whistleblower did not breach any conditions of its $44 billion buyout by Elon Musk. In a letter to Twitter, lawyers for Musk said Twitter's failure to seek his consent before paying $7.75 million to whistleblower Peter Zatko and his lawyers violated the merger agreement, which restricted when Twitter could make such payments. And with that, it's back to you.
The UK is mourning the death of Queen Elizabeth II. Huge crowds continue to gather at Buckingham Palace to pay respects. The Queen's coffin is currently in Scotland's Edinburgh for the public for their last respects. Sanjay Suri is getting us the latest from London.
Thousands and thousands of mourners gathering around Buckingham Palace right here. There seems to be no room for them. Long queues have formed, queues hours long already, and this is not even the funeral procession underway. That will take place on Tuesday afternoon. But long queues heading to Buckingham Palace from all directions. People bringing flowers to pay their respects, but not many able even to reach the palace to lay their flowers. There's no room outside there to lay flowers. There's no time to get there to do so. And a lot of people have been paying their respects and laying their flowers at trees and at other places around Buckingham Palace, in the many parks around the palace, because what matters is to express your grief and to mark the moment in your memory and for the occasion, because it's not possible simply for so many people to just sit at home and witness this. They need to be here, and they're going a long way out of their way to get here from all over London, from many places around London. And this is not just about Buckingham Palace. This is happening at Windsor Castle. It's happening in palaces around the country, certainly in Scotland and Wales and Northern Ireland and many other places right across Britain. This is an occasion that certainly will go down in the memory of so many people, and the air is poignant with feeling, even though the Queen is due to be resting inside Buckingham Palace in the ballroom there once the coffin is brought in from Scotland on Tuesday afternoon. All the time through that journey from the Royal Air Force station in Northolt to Buckingham Palace, where the hearse will be brought, there will be people lining the streets. There will be people here at vigil all night, and then on the body will be moved to Westminster Abbey, where it will lie in state. But no one really, and certainly thousands and thousands, are not waiting for the formal viewing ceremony in Westminster Hall. They're not even waiting for the hearse to be brought into London. They're here already, and there is more people to mourn than there is room for.
Britain mourns the death of Queen Elizabeth II. Sanjay Suri reporting from London. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. Goodbye.